Hello, welcome everybody to today's live stream. And today we're going to mix things up. We're going to do something different. So we were going through a huge construction section in the 1000s area. So I wanted to make things a little bit different because it seems like a lot of my viewers aren't very interested in construction type of companies, which is fair because they tend to be quite fairly valued. Um, so what I'm going to do today that's interesting is I kind of have a different process now. For those who haven't tuned into recent streams, what I do is I will add stocks into an unclassified list. So I will just put the tickers in, and I'll screen 20 to 30 stocks at one time, and I will pick what I believe are the top three, let's say. If something more things that go in are more look interesting, then I will continue to look at them. But essentially, yeah. What I plan to do is I will continue to finish up the 1000 section, but I will also skip. So I'll add 10 from the 1000 section. I'll also add 10 from the 2000 section, and also add 10 from the 3000 section. That way we have a better mix and diverse array of different subsectors, and I think that would be more interesting. So yeah, that's what we're going to be doing, starting off our day with first. If you haven't subscribed and you're new here, please remember to subscribe to continuous compounding. Don't know why that was so hard to say. Yeah, so let's do that. Let's see. Okay, so last time I left off at 179 is what I wrote for myself. Yamato. Okay, so Yamato, we add, and the way I have this watch set up is I already have like the market cap, enterprise value, some of their margins, some of their valuation multiples, so it becomes a lot easier to filter through certain companies that are obvious like no-goes. So it makes going through the list a lot more enjoyable. Okay. And also a little bit of a plug on my Substack is I have a very high conviction new write-up on my Substack. It's on a company that I think has extremely good business economics and will continue to improve. It's a tax on many services within Japan. So yeah, I'm really bullish on that company. So it is available only to paid subscribers right now. But if you guys are interested in reading it, it is there for you. Oh, this one is not. I think this company probably got delisted, so I will move that. Yeah. 175 Asahi. 179. What are some companies that you guys have been looking at? What are anything of interest that you guys have looked at recently? Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Perfect. So we left off on 184. So I'm gonna put that. Let's do 1,000, 2,000, 3,000. Page left off. Okay, so let's say 1980. Or we can do page actually. Page would be easier. 184. 184. Okay. And then okay, skip all the way to 2000. Actually, you know what? Instead of doing 2000, because we're going to bridge over it anyways, if there's any overlap, then it will be kind of, frustrating to say, hey, we're going to skip to 2000 and have it still be construction. So I think what I'm going to do is going to skip to 3000, 4000, and I think that would make things more interesting. So say this is 380. Oh, perfect, nice. Okay, so we get Yeah, okay, we're into the 3000. Cool, nice. Okay, so 3001. What is this company? Silk Yarn Production, interesting. Men's underwear manufacturer, okay, interesting. Uh, a trading company. Trading firm specialized in pipe materials. So we've got pipe materials, underwear, minerals and metals. Okay, interesting. Sports goods, Alpen, interesting. And is that 10 yet? Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, we have done 11. Okay. So, okay, we can remove Alpen. Oh, we have golf stores too. This could be interesting. I'll just include it. Yeah, so we'll include it. So Alpen 374 left off at ticker left off. So 190. Sorry, this one was 3028, and I believe this is 1980 is what the other one was left off at. Yeah, 1980. Okay, now 4000 series. So let's say 380. Let's say 540. Not yet. 600. Close. 610. Okay. 6. This is overshoot. Oh, okay. That's not even overshoot. Okay, perfect. 641. Yeah, so for those who are just tuning in, we are currently just compiling a watch list of companies in the 1000 area and 3000 area and 4000 area. Just around 10 stocks in each section. That way I can look through, I can screen through more companies at one time, and that will allow me to find more interesting candidates that might have be more of interest, or else I'm just going through what I think are B tier companies over and over and over again, and then it's not as interesting for the stream. So I also want to optimize for engagement as well. Yeah. So once I fill this up, then we will be able to get everything. Okay, is that 10? We have 10. Yeah. 1, 2, 3, 4, 5. Oh, we have more than that. 1, 2, 3, 4, 5. Okay, we have 2 that we don't need here. So I'll just remove these 2. Delete. Okay, so we have 31. So we're going to review this now. So we have 31 companies, and the first thing I want to do, that I created a custom formula, which is we have market cap, right, and then enterprise value. So then if there's net cash in the balance sheet, enterprise value will be lower than market cap here. And also screens for long-term investments, which should indicate investment securities, I believe. And then I take enterprise value including long-term investments, right? And I take that and divide by normal EV. So they essentially lower that this multiple is, I just create a custom column. The lower this number is, the better, the lower the valuation. So we're going to screen for this in terms of, is it ascending order? Ascending order, I believe. Yes. To see what is the cheapest. Okay. And then if market cap is 86, and EV including long-term investors 27, is actually quite low. It's like 30% actually. If I did one that is actually EV, including a long-term investment over MCAP, it would be even a lower number. So I could add that as a row in the future, but for currently it's okay. 5-year CAGR 20%, quite nice. EBIT margins in the teens, not bad. P 17 times. EV multiple including long-term investments is 5.3, 6.7 times. Okay. No forecasts. PE is a little high. Normal EV EBIT's 13 times. That's also kind of high. So essentially, this company could be a value trap, but probably worth looking into. So this is 3001. So we can add that. Let's see if I can drag it. Can I drag it down? Can I drag it? Nice. To be analyzed. Okay, next company on the list, 60%. 5-year CAGR, 30%. EBIT margins in high teens. Alright, EBIT 6.9 times, but next 12 months is 52 times. 4 billion free cash flow. It's trading around like 40% on MCAP too. Interesting. Rasa Corporation. The alternative way of doing this is also doing the reverse and looking at names that you want to get rid of. Wow, market cap is 2 billion. Enterprise value is negative 15. Negative enterprise value. Okay, interesting. Really low margins. Like because EV is non-existent, it's kind of hard to sell. 22 million in free cash flow. 22 million free cash flow. Market cap 2 billion though. Might be interesting to look into, but they have no div yield though, which is interesting. Which means they have net cash of basically their market cap essentially. Okay, it'll be interesting to look at if they are buying back shares or anything, if there's an angle that can be had here. Oh, did it work? No. There you go. I want to look for a lower PE stock. Let's see, ascending here. Okay, not bad. 72%, div yield 5%. Ooh, category 36%. Really low margins though. PE 4.4 times, EV 13 times. 588 million on 7.5. Low margin. What would the angle be here? Next 12 months profitability is going down too. Interesting. So trades low on a PE basis. Oh, they have debt. They have a lot of debt. Wait, is this incorrect in terms of the... Oh, I should have something relative to market cap too. Because they have debt. So PE is low, but then they have debt. really low margins. Mm, doesn't look as nice now. Okay, MCAP of 10, enterprise value of 5, that's good. Okay, good. 80% of that, but it's only 40% of market cap, so that's cool. 2.7% div yield. Low margins though, low PE, low EV. Okay, so just cheap company. So this could be interesting. Okay, let's see. I'm good with consumers company. Let's take a look at the consumers ones first. Okay, not much over here. Cap 2.4. Okay, this one has debt. This company has debt. I should create one where there is EV with long-term investments over MCAP. I think that would make things easier. I should make a custom column here. Formula. We need enterprise value. Did they do net debt? Well, if you enterprise value, you don't need that actually. So long-term investments. Financial statement and the quarterly. Okay, so that would be B minus C over A. What do we want? We want number or currency? We can edit it. Let me just double check. See, what do we want here? Percentage. Oh, we want percentage. Right. What am I doing? Right, this should definitely be a percentage. Okay, so adding that in. That's perfect location. Perfect. Okay. Okay, so that way we can sanity check relative to MCAP. Because if this is over, enterprise value is over MCAP, that means they have debt, right? So it's a signal of debt essentially. So that makes things nice. Yeah, so this company has quite a bit of debt. Okay, not as attractive now. I think debt is not necessarily a bad thing if they have enough growth. Let's look for margins. Let's do descending. Okay. Tom's Laboratory. 5%, even margins 44%, income margin 33%. Wow. PE 9.6 times, EV, EBIT 7 times. Free cash flow 2 billion. Wow, free cash flow 2 billion on 58. 30 times enterprise value. 197A. Healthcare isn't really my bread and butter though. Oh, just notice that my microphone's not even right next to my mouth. My bad. Let's see. Real estate. Okay, wow, a lot of leverage here. Margins are, yes, high, but could be because of margin. Multiples really high. Not ideal. Alpine, let's see here. Alpine is okay. Oh, net income margin is horrible. Why are net income margins so damn low? Free cash flow 2.5 on 2.5 on. Ooh, no. It's like over 30 times. How should we go about this? Maybe we remove anything with a high PE first, so then that makes our lives a lot easier. So let's do descending. Yeah, anything that's that high we don't have to focus on, so then 67 times materials, 67 times EV EBIT is more okay. But they have a lot of debt, so I don't like that too much, so get rid of that. Four times P, 28 times. Yeah. These ones will be harder to figure out. Gunze has some debt. 5.7% dividend. Interesting. Low EBIT margins. Net income margin even lower. 39 times P. 1.3. Yeah, not great. Oh, EV to MCAP is 50%. Interesting. Financial company, 21 times. EV multiples are pretty low. Okay, that could be interesting. Guess I'll delete these ones first. Yeah, I should just look at one of these companies now. Okay, we can start. So first company is Applied. Wow, okay, so their share price has been climbing. Well, 1600 in April, it was at 2300. August of last year, it's around 2100. Went up from 2300 now to around 50%. A little over that. Okay, what did they do? So Applied Company sells computers, peripherals, digital products in Japan. It also is involved in planning, development, manufacture, sale, and wholesale of private brand PCs and digital products. In addition, the company engages in the procurement, advertising, and sale of products of other manufacturers. Further, it provides network system construction and maintenance and remote services. As well, engages in the AI solution and system development activities. The company was founded in 1977 and headquartered in Fukuoka. Okay. Profitability. If they say peripherals, computers, that kind of stuff, those have pretty low margins. That sounds like they're not selling their own products, they're selling the products of other people. Maybe they have their own products. Gross profit margin is 20%, SG&A 16%. So very thin margins. Okay, so essentially they're like a middleman. These are indicative of margins that are similar to a middleman, I guess. Market cap $2 billion, 7. Okay, stayed there. So currently is 10. Currently is 10. So 10 market cap around, let's call it 4, sure. 4, so 6 billion. Enterprise value perspective, it is cheap. PE multiple, last PE 5 times. As high as 7 something times. The question is then how does it grow? It could definitely be a value trap. Could definitely be a value trap. What are the long-term investments? Long-term investments. $1 billion. So if the quick enterprise value calculation was correct around 6 billion, then including long-term investments is around 5. How revenue is it for this company? Let's see. So last 12 months is 46 billion. So okay, it has increased a little bit. Went from 27 billion to 31, 42. So increased by 16. LTM is 46, right? So it's increased around like 70 something percent, 75, something like that, 80%. 2 billion operating. 2 billion operating. Wow. $2 billion operating income. So if they can generate that much, honestly, they're gonna keep having a lot of cash. The question is, how will they continue to grow their revenues? Interesting. Okay, worth looking into. Give me a second, guys. My mouth is a little dry. I'm gonna give me a second to grab some water. Be right back. Okay, we are back. So I just need some coffee. Okay. Okay, let's see. Let's first take a look at their financial statement to see if. Well, we could actually look at company info. Let's take a look at what the company is about. So we're at the home page. Applied Group. B2B wholesale and purchasing site. We stock a wide range of products, including home appliances, PCs, cosmetic, household goods. Our website will do its utmost to support buyers looking to buy products with great prices. We see like a Dyson. We see like some skincare. We see some, I think that's soap or body wash, and then some oven. AI and visual inspection. These are the groups. Okay, so management of the PC specialty store applied. Solutions sales for government agencies and universities. Wholesale sales of PCs, home appliances, miscellaneous goods, and cosmetics. Web services and mall order site management. Management of house, a specialty store for cosmetics and general merchandise. Management of closed site and culture sites. Fukuoka, publication of town information magazine, city information Fukuoka, planning and publishing of MOOC books, event planning and management. Okay, interesting. Okay, so I need to go to the investor relations. Okay, so they have Q1. Okay, I have to download this on the side. 3020 Q1. Do we have? Well, it's only their fiscal year one as well. Okay. We're just translating the document. Give me a second. Okay, so we have Q1. Let's convert to Q4. Okay, while we're waiting, we will insert some information. Okay, so this is Applied Corp. 20 last quarter's Q1 fiscal year 2025, probably. August 8th, 2025. That date is definitely translated incorrectly. 3685. Okay, share count. Okay, let's see. Cash 5528 dropped a little bit. Electronic deposit and guarantee. Guarantee deposit. Probably security deposit of some sort. Okay, we'll just ignore that. Debt 75. Nope. Something else. Okay, a little bit of debt. A lot of cash. Book value. Okay, 0.8 times book. NCI, a little bit. A little bit. 113. 1%. What is their div yield? 30, 70 is a 100. Okay. 2.7%. Okay. Let's see. 5, 5, 8. Okay. Okay, fiscal year numbers. Let's take a look. It's a huge drop in net income. Should look into what that is. What is the forecast? One sec. Forecast, full year. Well, let's look at this period. Yes. Did not change it. Good. So, slightly higher revenue, slightly higher operating margins. Okay. Stock closure losses. Okay, I'm gonna ignore that. Tangible fixed assets. 289. Nope. 245. Intangibles barely any. 0. Looking at this, I doubt anyone covers this stock. It's pretty low market cap. Yeah. Yeah, we could just guess basically. Try to guess. Say 192. Let's do a midpoint here. 290, 250, so 270, 265. Yeah, 270 is fine. Okay, pretty cheap. What are we anchoring this on? They buy back shares. Not really. Dividend though. Oh, how big is their dividend again? 2.7%. 0.8 times price to book. It's cheap. It's cheap. But then like, yeah, even if you use market cap instead of enterprise value, you just multiply this by 2, right? So, I mean, these would still be cheap at a 4 times EV multiple, or like market cap to operating income multiple. Pretty cheap. So they have a lot of cash. The question is, how are they going to use the cash? Have they issued any buybacks? there be any discussion here? Do we have cash flow statement? Do we have a feeling they don't report cash flow statement quarterly? No, they don't. They do not. I'm gonna quickly take a look at their income statement. Cost of sales is really high. Sales commission, advertising, salary, profit, impairment losses. So there's an impairment loss. Then there's a corporate tax. Okay, yeah, the reason why is because there is some impairment loss. If there's no impairment loss, then it's pretty reasonable. See if they comment any commentary here. So okay, so I'm gonna put a hold 1 second. My throat's feeling a little itchy. Okay. So during the fiscal year under review, the Japanese economy continued to experience rising prices due to soaring resource prices and weak yen. So this is fiscal year 2024. Okay. But economic activity shows signs of gradual recovery. However, the situation remains one in which optimism about the future is not justified. Prolonged geopolitical risk. Okay. Higher labor costs, concerns about intensifying trade competition. In the IT industry, demand for PC replacements became apparent following the end of the support for Windows 10, and solid IT demand was seen, including capital investment by individuals to avoid security risks and by corporations to save labor. Okay, in response to these changes in the market environment, we have promoted total support for IT implementation, including the provision and maintenance of in-house developed hardware and solutions, in order to respond to diverse digitalization needs that emphasize safety, efficiency, and robustness. So applied, a computer specialty store of 26 stores nationwide. Okay. Expanded its lineup of original computers for specific purposes that can be used in special environments in addition to office products. The company actively developed solutions such as IT implementation, support, and data maintenance and security. See, what I'm trying to think about is, um, they're selling computers, right? And they have stores. And this business model isn't great. Just in and of itself, this is not a great business model. But the thing is, trying to think of how have they increased revenue with the existence of, companies like, Amazon, Rakuten. There's also a shop bot from Kakaku, Kakaku.com that compares all the sites for computers and stuff like that. So I'm just curious how they're able to even compete. It seems kind of difficult, honestly. So, I'm trying to figure out. So 26 stores, okay, original computers for specific purposes. IT implementation support, data maintenance, security, and sought to expand sales by holding business fairs and providing implementation consulting through online seminars. The SI sales department, which focuses on sales to universities and government agencies, has 25 bases from Kyushu and Tohoku. Utilizing its mobility and technical capabilities, the department has promoted sales activities in the local community in order to provide cutting-edge research and development environments. Okay, so that could be an angle. So the angle is they sell to universities. Then the question here is then why do they go? Why does the university buy from Applied and not directly from let's say Dell or Apple? Okay. So the special equipment sales department, which focuses on B2B sales, conducted data analysis and activity management using a sales website for business partners and a proprietary business partners. And a proprietary business partner management system. Sales were boosted by capturing demand for computer expansion and replacement, as well as sales to the research and development and information systems departments of private companies. Still curious how they are able to outcompete, companies selling direct to businesses. Okay, so in the cosmetics and sun-dries business and house, a cosmetics and sun-dry specialty store with 5 stores in Kyushu and Nagoya, we work to differentiate ourselves from competitors by offering our developed products, holding original events regularly, and expanding our membership services. Membership services. Okay, that's interesting. Thereby increasing the appeal of our stores and increasing sales. So they have 5 stores. Their own products, in-house products. I'm curious what the membership services is, right? In the publishing and advertising, Fukuoka-based City Information Fukuoka has been working to acquire customers and readers through its local media, Fukuoka Navi, and seminars that utilize SNS, in addition to publishing traditional town information magazines and project books. So I don't see much going well with that segment, because any type of print media is, given my research on Oricon, it doesn't do really well. As a result of the above, net sales for the consolidated review is up 10%. It's interesting. So I want to figure out where that's coming from. So in the PC and game business, we aim to direct sales manufacturer that is a company that takes on the challenge of making AI as a part of everyday life, as demand for replacement increases following the end of support for Windows 10 in October 2025. So I'm curious if this is a one-off, right? So because this company had increased revenues, or are we saying that, hey, we're ending support for Windows 10, so every company has to go up, and then next year it goes down? But then they forecasted 47,500. So we expanded and promoted sales of our own product line, including the high performance and high quality Servo workstation series and a high durability Pathfinder series, and sales revenue reached 34,572. In the cosmetics and sun-dries business, we aim to be a general store filled with small moments of joy. Interesting. Creating a small sense of happiness. We increase our ability to attract customers by collaborating with the Harvest Festival at Hina Farm, the Applied Group's own farm. Oh, okay, they have our farm. Interesting. Promoted differentiation by holding gift fairs. Okay. In addition, wholesale sales remain strong, resulting in 15% increase. So 15% increase from the cosmetics line, and 9% increase in the PC and game business, which is interesting. Their own product line, Servo workstation. Okay. And the publishing and advertising, it's up 15%. Wow. How's that possible? We aim to build the best information dissemination base in the prefecture by promoting new development and deepening existing business through the monthly city information of Fukuoka business and the web version of the Fukuoka Navi, and providing advertisement support services to the government that utilize our comprehensive proposal capabilities. Okay, so they have some private and public revenue sources. Interesting that this went up though. Okay, future outlook. There are concerns that the outlook will remain uncertain due to factors such as prolonged. Okay, that's fine. As the global economy enters in a major turning point, the need for digital shift has become recognized as new in all markets, and we believe that the role of the group, with IT business at its core, will become increasingly important in the future. Under these circumstances, we will accurately grasp the need of business field and implement flexible product development and sales strategies to maintain and expand our existing customer base and cultivate new customers, thereby further strengthening our business foundation. I still don't get what's differentiated about them though, in terms of the PC business, because they are competing with companies like Dell, right, who have enterprise contracts, right, that sell in bulk, right. I'd actually say like, hey, Dell is like in Japan operations, like, oh, we're just gonna leave it to apply to help us penetrate certain areas, then sure. PC is 31,000. Segment profit. Oh, cosmetics doing really poorly. So we have like we have like 6.6%, around 6.6% segment profit margins for that. Cosmetics is not doing well. Publishing has a 15% margin. Not bad. But very small though, very small portion. So it's not really. What is the point of keeping this business? It's so small. The idea is like because they have these connects in Fukuoka that they can contact companies for PC replacements. Okay, so they went from negative to now break even. Okay, so it's interesting. So they were minus. Wow, that's increased revenues by 1.6 million. Sorry, 1.6 billion yen. So 1,600 million, and it only got to break even, which is I don't know about that. So also a low margin business. So revenues here increased. Revenues here increased. Cosmetic line uses very little assets, or this just got depreciated. That's all. Depreciated tangible assets. Okay. Okay, well, hopefully there's some operating leverage here, but for revenues to increase like 1.6, for it to only, segment profits to go from minus 43 to like 0 is kind of not that great, I want to say. Which means that revenue just grew, but then it grew without adding to margins that much, honestly. So still the PC business, that's their main bread and butter, but let's take a look at the margins of that real quick. So if we let's quickly like 1.720, 1936, that was the 34572, 224. Okay, increase to 7%, not bad. 6.1 to 7%. But then this business, I don't see it doing well though. It's just like, what is there? Okay, let's see if there's an investor presentation I can look at. That might help. Did I download an IP? Let me see. They don't have an investor presentation here. commentary and buybacks. Let's take a look at the shares. So few shares though. 380.69, so they barely bought back any. Right, so they bought back some. That's like minuscule though. Okay, let me think through this. Still feels like a value trap, but let's take a look at the cash balance over time and see if we can see a trend or anything. Let's see if we can see anything here. Okay, so they had debt. And they slowly paid down debt and built a cash balance. Okay. Yeah, I don't see how they can continue. Like, what can they use the cash on? And what did they use it on? Like, why did they need debt here? That's my question. Yep, cash balance going down, debt went down, pay down debt, which is good. Oh, it is cheap. It is cheap. And then they're at 0.8, so if they issue some type of buyback program, it would be very effective. 0.8 times. Margins are kind of low though. Currently, it is in value chat region, and then the idea is then, do we buy it for the optionality of, potentially buying back shares? Another angle is like we could look at some customer reviews of like how their cosmetic line is doing, because they could be just investing in their cosmetic line, right? Just secretly, So we can take a look at that. So let's see here. So they have a cosmetic line. Let's take a look. Company stores, sales, store, offices. It's called House. University sales department, store sales. Oh, it's House. House Ito store. Okay, interesting. Creation class. I thought they're in cosmetics though. What is this? This looks completely different from cosmetics. What? Looks like some arts and crafts thing. House kitchen. Wait, that doesn't make sense. Sun-Dry specialty store. Yeah, let's take a look at the other stores. They got more, right? So. Okay, so you see flowers, we see clothes, we see coasters, we see again arts and crafts and food. Workshop cooking flower. Web shop. Yeah, let's take a look at web shop. Yeah, what? Such a wider range of things. So they got watches, they got appliances, they got fashion. What are they trying to do here? Seems like some type of concept store for like. They got TVs. They got a hair straightener, a shaver, GoPros. What are they trying to do? Okay, so we're gonna do, let's do a non-converted version. How's Kurume store? Okay, so we're gonna search this. Take a look at their rating. 3.7, not great. So that's already a bad indicator. So already kind of bad. Okay, 3.9, a little bit better. Kurume, we did, what else did we do? Hibiki no. So 3.7, 3.9. Fukuoka, wait, this is the same. Same. Oh, I got the copy and paste wrong. It's the same place, hold on. Fukuoka, Kita, Kyushu. Kita, Kyushu. I copied the same thing twice. Okay. Which one is this one? This one is Kurume. This one is... Oh, I did that one. And then this one might be Ito store. Oh, okay, okay. Okay, let's see. Okay, 4. Anything above a 4? Because in Japan, like, you want to be above a 4, honestly. Okay, 4. Exactly at a 4. Oh, 4.4. Okay, there's one with a 4.4. And where's this? In Ichinomiya, Aichi Prefecture. 173 reviews, 173. Kumamoto, Fukuoka. So not extraordinarily highly rated. Look at these. Let's look at the photos. Let's see what they sell. Okay, see, so these type of stores are like concept lifestyle stores that target certain audience members who go inside. Probably has some local vendors, local goods. Great for tourists to kind of buy like souvenirs, I guess. Kid clothes, massage. So I guess the idea is you go in and you would kind of explore and you kind of discover products because they're well decorated, right? Well, they have watches. Female clothing. Okay, I feel like the store is mainly targeted towards women. Feels like it. Yeah, there's fans, there's jewelry, there's sandals, there's plants, makeup. And there's kids' clothes, so it's really for mothers. I don't see much. There's like a one-stop shop for mothers. Yeah, kitchenware. Okay, this is really for mothers. So then the thing about like cosmetics is a little bit misleading. So they're not doing cosmetics. This is like a concept store mainly targeted towards mothers, basically, is what I'm seeing here. Yeah. Well decorated. Okay. Let's see, the worst store, the 3.71. What are these reviews? What do people say here? Okay, good review says, okay, what is a bad review? Okay, there's a bad review. Occasionally you'll find great items that you'll all fall in love with at the store. Prices are almost full price, so they don't do discounts. Previously, the gate post at the entrance to the parking lot was in the way. It made it difficult for large cars to enter, but it seems to be completely removed, and now you can park stress-free. I'm sure it was removed by tears of countless customers who scraped their cars against it. Okay, so some things that are not related to stuff. The clothing is expensive, but the feel and quality seem to be good. Now that I've found what I want to go buy it as a reward for myself. Lots of various miscellaneous items, great selection, great for gifts. I mainly want to look at bad reviews. Lois. Great place to buy small gifts, but the bad attitude of staff makes you feel less inclined to buy. Probably just go to Loft. Okay. Loft is a department, like a, is it a department store? It's a store where there's like a lot of different brands, but everything is very aesthetically placed. I love going into Loft when I went to Tokyo. Okay, so clerk in the evening was on October 28th was extremely intrusive. As I was looking at the products, I passed by so close to the near aisle that I almost bumped into it, and it was making a lot of noise. You can quickly sort out the products you were looking at. I didn't say anything as I passed by. Is that what it was at the point? I was always nearby and noticed it. I use it often. The clothes are made of very good fabrics and have good, cute designs. I also like that they have good selection of cosmetics. This time I went home right away. I go for lunch and might be busy in the evening. I'm gonna just convert this into original Japanese because it makes absolutely no fucking sense. Okay. Let's use ChatGPT to convert that. Okay, the store clerk was extremely bothersome while I was looking at products, even though the aisle was narrow. They walked right past me so closely we almost bumped into each other. On top of that, they were noisily clattering the products around. They even started rating the very items I was looking at. Despite brushing right past me, they didn't say anything. At that point, I was like, huh? They kept staying so close and it was distracting. Okay, so not giving customers space. The price tags on items on the hangers were hard to read, and when I reduced the number of items I had purchased at the cash register, the woman working cashier gruffly threw the items behind me without replying. She had a semi-long hair tied, so some HR problems here. Often go there to buy presents, but no matter how good the products are, I don't want to go there to staff are bad. Okay, customer service seems to be an issue right now. Staff attitude is horrible. So product selection is good, but then male employees are terrible at handling. Okay. So they have to work on their HR, is what it seems like. I don't know. These type of stores are interesting. So the thing about these stores is that they sell a lifestyle, right? They sell a concept, an idea. Because of how things are placed, it invites you to go there to like have a look at things. But then the problem with this business model is I can always go there to look at things, experience the retail therapy that it provides, but then ultimately I just go back and buy it on Amazon. So that's the problem with this business model is that I don't have to. I can go there for inspiration, but the inspiration doesn't lead to a sale. That is a problem, and that's what you find at bookstores, right? I love going to Chapters or Indigo in Canada, right? The bookstore looks great. It's a very inviting. The ambiance, the interior design of the bookstore is phenomenal. Right, it makes me really want to buy. But then I look at the price tag, and I always think to myself, well, if I can get it for $4 cheaper on Amazon or $5 cheaper, and have it sent to my house, like I don't need to read it right away. Like, if I want to read it right away, then sure, I would pay that extra premium. But if I'm saving, anywhere between 10 to 33% on any hardcover book on Amazon, then I'm just gonna go that route or go the ebook route, right? So, this is tough. But this is great for tourists though, because tourists won't they're let's say they're staying in an Airbnb in a hotel, they're not gonna order Amazon, right? So, they would benefit from tourists for sure. Um, yeah. Overall, I don't see. Okay, this is how this could work out. Okay, so if they somehow have some type of operating leverage from these stores, right? Um, where they become like the okay, so all know about like Target in America, right? Where people want to go to a lot of the joke is like the running joke is husbands will stay in their car, wait for their wives to shop at Target, and then or some of them even like take out some like one of those beer beach chairs and sit there drinking, and all of those all the husbands in the parkade start to like just congregate with each other while they wait for their wives. Um, so what the store concept could turn into is, in the best case scenario, is a store targeted towards wives, where they can spend a lot of time and go in and pay full price for things. Um, it's tough. It's tough. They have 5 stores and they just broke even, right? So then the idea would be, in the best case scenario, is they have that excess cash on their balance sheet, right? And they're going to use and they are able to utilize it um, to open more stores. Currently, it looks like the business economics aren't great. That doesn't look like the business economics are great here, and it doesn't look like the other one is. The other segment is really pulling much weight. I mean, it has 15% margins, but it's a Fukuoka-based like publishing thing, and I'm not really bullish on anything publishing, just because digital media and that kind of stuff is tough. So it's possible. Maybe how did their Q1 results do? So it's Q1. Um, Lost money, but revenues dropped, but it lost less money. That's interesting. That's interesting. So maybe they're doing some cost cutting things. Web shop. Pauline Blue. 7 cents. Yes. Sort of watch selection. Garmin, smartwatch, Citizen. A lot of watches. Fashion. New fashion. Gaming furniture. That's interesting. That's I don't know what they're trying to target here though. If it's wives, it's kind of strange. Appliances. Yeah, it's tough. I don't see the competitive advantage here. If they even if they do well, I mean, probably their margin is going to be 4 to 5%, 4 to 6%, somewhere in that range. Yeah. So still looks like a value trap. So I put this as a B probably. This is not an A. Can it be an A? It's tough. It is cheap though. It is very cheap. It is very, very cheap. But are there cheaper companies? Yes, there are. They're cheap. I think Buffalo was cheaper at one point. So yeah, if the idea is Buffalo was not bad, then yeah, I can't give it to it. It's close. 3020. Okay. Let's take a look at the next company. Crema. So the thing about this company is that okay, so they have net cash that covers the entirety of market cap. Entirety of market cap. Low margins though. PE is non-existent. PE is non-existent is a problem. 3.6%. So what they are profitable? How's it? Oh, there's PE 24 times. I don't know about that, but we can look at it. We can look at it. We can look at it. We'll give it a shot. Okay, so overview is, oh damn, okay. So this stock has been trading depressed for a while and consistently on a decline. Was at one point, holy shit, very promising at one point. Somehow IPO'd with really high hopes and dreams, and now it's been obliterated completely because it hasn't lived up to the hype somehow. Okay, but let's see what it is. Okay, so together with subsidiaries, operates an online marketplace where individuals can directly buy and sell original handmade goods, works in Japan and Asia. So this is like an Etsy. The company helps users who find products in various categories, such as accessories, jewelry, bag and rucksacks, wallet, case, accessories, cases, right? Okay, this is China shit. Fashion, furniture. Also offers products in other categories, stuffed animals, figurines. Okay. Other material products, other platform services such as marketing support, creator empowerment services, operates an e-commerce site that sells artists who work in videos, arrange exhibitions. Okay. So actually you're telling me there's no competitive advantage now, or its competitive advantage is completely deteriorated. Okay, so at one point in time they were losing a lot of money. So let's see here. So okay, so this year they're kind of making some money. Okay, so then the question becomes, are they able to sustain profitability then? So let's look at annual. Oh damn. Okay. 2019. Wait, so let's take a look. 34017. Let's see. When did it IPO? IPO'd in COVID. Wow, 5,000. And okay, you got completely obliterated. Okay. Losing money, and then 2023 lost money, and then back to break even. Income statement? Okay, so stagnant revenues. So they refined their cost structure now. Yikes. So I had lots of hopes and dreams. So it increased 50%, increased 30%, and then just stopped growing. And then people just gave up on the stock probably. 2 billion market cap? 2 billion market cap. So they have cash from their IPO probably. Yes. This is just okay, this is just cash from their IPO that they haven't used. Well, that's shit. An online marketplace. Take a look. Yeah. This will. I'll try to hard pass this really fast. Okay. Okay, so they work with creators. And creators can list their products for sale. So it really is like an Etsy model, I feel. It feels like an Etsy model. Who really buys these type of things? Mainly women. primarily a female audience, I would say. And then the problem is, how do you differentiate what is actually truly handmade and then what is just sourced from China and just someone slapped a logo on and used different pictures or better, nicer pictures, let's say, just to hype up the product. That's kind of hard to differentiate. Materials. So for people who want to sew, make their own jewelry, arts and crafts. Okay, it's just arts and crafts. Find food. Okay, so my analysis of this, just on the surface, is that it didn't have enough traction. It's not going to have enough traction now. Um, yeah, just a overall hard sell. And it was probably some type of market cap play where it's kind of like, oh, TAM of if we use Etsy as a uppercase, like a best case scenario, what would this company be valued at, right? And that was dropped to 2 billion yen, so it's you know basically nothing. Just cheap though. But then how is there any upside? Like, how is it possible? So okay, the way you would do this is you would look at what their traffic is like, over time, and whether there could be any type of upside from that. But it's kind of hard. President and CEO is wearing a hoodie. Okay. Okay, let's see if there's IP that can inspire some type of emotion for me. But I don't like this photo. Looks like the guy's pissed off. Okay, so revenues. One sec. Let me. Lost money. Now they're slightly break even. It could be a turnaround story. Could be. Could be. Okay, let's convert this IP so we can see if there's because something is beyond the horizon. They have to say it, right? They should say it. So 414017. Yeah. For this, the ultimate determination of whether this is legit or not is, are the products actually differentiated, right? And it shows me that likely, given their current business result, the products aren't differentiated enough for someone to be like, okay, I'm paying this premium on this website for something that I can just get. That's a carbon copy from China, let's say, for example, right? Or this looks very similar to something that you would find on AliExpress or Taobao or Temu or whatever the fuck. And then someone slaps their own logo or twist to it, right? at some type of event. Yamabiko Festival. Is that like a festival? Large scale event was canceled, so they saved money. So not held and held. Hmm. Okay, so it seems like they're doing some cost cutting. Hmm. Hmm. Creator seller goes on Creama, submission of works, purchase artwork, buyer payment, sales revenue, trading fees. So they charge trading fees, right? So, hmm. Work of creators. Okay. Right, a lot of people want to be their own designer, right? People have their own t-shirt brand, hoodie brand, sweater brand, everyone has their own fucking brand. Um, hmm. What it's telling me is I'm not convinced that they have enough scale where they have enough traffic where people are actively going to that website. That's what it feels like. Yamabiku Festival. So what that looks like to me is like some type of festival where they showcase handmade products, right? Or creators will show up with their products and have a stall, let's say, for example. For them to cancel that, even though it saves them cost, is kind of bad. Mm. Hmm. Merchandising initiatives that capture seasonal trends for openings products using social video media, SEO measures, improvements to the app's UI. On the other hand, as a result of factors such as rise in web advertising unit prices, the lingering impact of the impersonation email issue that occurred in the previous period, and the impact of 3D Secure 2.0, which was introduced in response to regulations. Hmm. So revenues are not going anywhere. So again, Mother's Day. Okay. In addition, we will strengthen our use of video media and promote the appeal of creators' works to attract new customers. Additionally, we are strengthening SEO measures, improving the UI of the. So here's why the business model doesn't work, in my opinion. Okay, so you have creators, right? And then creators have their own brands. These creators are buying. Let's say they make a T-shirt, right? Their MOQ is going to be significantly lower than a company like H&M or Zara or whatever, or Uniqlo, right? So they buy their blanks at already a higher cost, right? They add their own design. How much do you think they'll sell it for? They'll sell it for quite a bit, right? So, and a lot of these creators aren't that great. Let's be real. Like, they're not that. So their cost structure is already higher. So you're charging, let's say, Uniqlo might charge $20, $30 per t-shirt. They have to charge 40, $50 for a t-shirt, right? What is the actual clientele for that type of thing, right? Not very differentiated. That's what I think. Is there an Etsy Japan actually? Is there? So I feel like if there's an Etsy Japan, that would screw up their entire. Yeah, there is an Etsy Japan, right? So okay, so unless you're saying like, hey, I don't know what their cost structure is. I don't know how much they charge creators, right? But let's say I don't even know if they're undercutting Etsy, you know. But this is a traffic play, right? Like, If you're not getting enough traffic, then it's not going to be helpful. And then for them to have a major festival, let's say, that's kind of like a farmer's market or type of Etsy creator type of esque event, and cancel that, that's not good for traffic at all. So if I was a creator, an actual, brand, I would move platforms. I would not stay loyal to this platform because you're not giving me enough traffic. Um, okay, so they're being targeted for phishing fraud, so people impersonating the company for phishing reasons. That's bad because if people get annoyed by those phishing scams, they just basically drop you off their email list and they're no longer a customer, no longer a unique active customer. So that's really bad. Um, okay, the saving grace for this type of company is that okay, app download number of registered works or like posts. Let's say so 2 million posts. Okay, the fact that the posts are rising is a good thing. Downloads increasing is also a good thing. So this is let's see, is this 15 million then? 15 million app downloads. That's not bad. That's pretty good. 15 million in a country of 120 million people. It's not bad. Transaction price average of 6,000 yen. Hmm. Handmade in Japan festival. So they do have some festival, but they had to cancel their other festival, which is not great. So hmm. They're cheap. So they could get acquired, honestly. They could get acquired. Right? For as cheap as they're trading for basically zero enterprise value, right? So you get all the upside to something happening potentially, but it feels like they're playing defense. I don't see anything that can allow revenues to go up. So this is something you just constantly look at. You look at number of app downloads and if that's increasing, if that's stagnating, or if that's dropping. The other thing is active users, right? If you're not getting enough active users, this is useless, right? And they're not reporting those core KPIs here. I don't see them. I don't see number of active like. Yeah, no, we're not saying unique users, users. Wait, did I miss something here? Oh, sorry. No, 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 no. Yeah. Okay, guys, I have to go home for dinner now. So it was, yeah, this stream didn't really find much that that seemed great, in my opinion. You guys can feel free to look further into these two companies. So just as a quick recap, looked at two companies. This could, this is cheap, right? Unless you can develop a unique angle, I don't see how this one works, but it could work. 4017. I would give this a C. It's like a, yeah, give it a C plus. C plus. Just because there could be some angle. It's trading at basically even enterprise value, so it's really a turnaround. Are they able to turn around? The catalyst would be if they get acquired, right? So if you buy this would not be a big position. But the thing is, if your portfolio is big enough, you could just buy like a few shares, I guess, because it's only 314 yen, so it's not too bad. Um, so you could do like a YOLO bet on it if you think it might get acquired, but you need a unique angle for that one. And the thing about 3020 is you're trading. The angle for that one is whether they're stores they can convert the stores into profitable stores, and can they invest? And if they can, then that becomes a unraveling of the cash. So, like, so then they can use the cash towards new stores, opening new stores, new concepts, investing online, yada yada, improve their cost structure. Of course, with 5 stores, the cost structure is going to be quite crap because there's no actual synergies in terms of, the logistics of things. So, yeah, and it's going to be hard for them to compete with like online vendors. So I don't see how that's going to work out, but it might work out, right? Because of tourism in Japan, so that could be something that could be unique angle. But yes, thanks for tuning in, guys. I have to go, and that's my recap of these 2 companies, but they're not A companies. So yeah. Okay, thanks for tuning in.